Welcome traders, hope everyone's well. This is a follow-up video on our Treasury series. In the previous video we had covered absorption and backticking. There's going to be a link in the description to that video if you've not watched, as this is a follow-up to this. So this exact video is going to cover the other side of the coin, which is going to be a pressure point, step in the profile, and essentially price going to drive through a low volume area and where you're ultimately looking to see some stops that are being hit. Okay, so quick run through of what you're seeing here. Okay, far right is the 5-year, this is the 10-year note, this is the 30-year bond, and this is the ultra. So we have the 4 of these up for correlations, and this specific trade or opportunity can be seen in the 10-year. We will be using the 5-year essentially to lead this, but it happens quite consistently across the board. So this has been a day's price action. You can see by the volume profile. We're in the morning down here at 6.5 sevens. We essentially started trading the day out. Then we had a nice big bid that came up. We've then traded out this area, okay, seen on the volume profile. We then swept above the NFP high that was created the previous week, and then we are now trading below here. So we're currently at this point of control and step in the profile. Now, in comparison to absorption and backticking that we had looked at in the previous video, when it comes to areas here, you can see this very much so on the 5-year as well as the 10-year. That when price comes into this level, you've got 15s is pretty much going to be the last of defense for the bid. And when sellers start aggressively hitting in here, okay, you want to then see price, starting to collapse down in some aggression. This can happen in one of two ways. It can happen by aggressive selling, or it can happen where when price ticks into the next area of resistance, okay, you're going to see a number of orders being pulled. Now, the pink line that you're seeing here is the volume weighted average price. And ultimately, you were looking to target, if you were taking this position, you'd be taking this from, say, 15.5 16s and anticipating that there's going to be some market orders coming in, and orders down here are going to be pulled, and probably targeting this down to, say, 13.5 13s. Okay, so we're going to play this out, and you're going to see how the order flow looks when this comes in. Okay, and note the 5 and the 10s that we're watching. Okay, so we can see that the market is now hit through 15s. Okay, we have ticked down, and there was 4,000 contracts here. As soon as they've hit 17s, they have then pulled, and now they've ticked back up. And notice how much the offer has reloaded. They've instantly reloaded with 6,205 contracts. Okay, same can be seen on the 5-year. So we see buyers ticking back up. However, the offer is still essentially looking to stay strong. This can be your sign here where you're looking to essentially enter if you'd missed the initial hit. And you can be gauging the 30-year and the ultra for confluence in this position. And once 15s gives way here, and once 15s gives way, you're essentially going to see a cascade below this level. Watch 14.5s and 14s. There's 4,500 contracts right now, 4.8k there. They're continually adding. So if price gets there, notice, is there going to be a continual adding on the bid, or is there going to be orders being pulled? So we'll fast forward this a little second. Okay, so instantly there you see 2000 is taken, 1500 then reloaded. Okay, 4000 contracts now shown. Okay, and watch the amount of orders that are going to be pulled. Okay, so only 6 more contracts has traded into the bid, and yet 4000 contracts has just disappeared, cancelled. Okay, pulled away from the book. Okay, so when they take this out, you then want to see what the next behavior is on the next price down at 14s. Okay, same can be seen on the 5 year as well. These tend to work in tandem with each other. Okay, so notice how the offer is being refreshed as well. And treasuries, when you're executing this, of course, it's not like indices where this will just dump. You get a good 2 to 3 minutes to really make up your decision of how this is going to play out. And if you were taking this, the market should not be returning back above yesterday's POC or really the point of control. And the targets you're going to be looking to take here is probably 4 to 5 ticks on this trade. 5 years just cleared. We will fast forward this for you. Okay. So there's been 5,000 then taken, 2,400 reloaded, and now we are now hitting into the bid. Okay. With ultimate targets going to be 13s. There's a key difference in the order flow versus the absorption and backticking. And this is at 1 time speed, so you're seeing this. And there we go, 3,500 contracts then executed and instantly reloading on the offer. The 5 year is already just approaching the volume weighted average price. And when you're getting down here, you're probably going to see some backticking. And your ultimate target can be, I mean, you can hold this all the way down here, of course. However, to be on the safe side, if you're looking to take probably your 4 or 5 ticks out of this movement, and this is essentially price trading through the low volume area. You know, you have 90,000 contracts traded at 16.5, whereas right now you're at an area that has, you know, 1,010 contracts, 1,057 contracts. And when you've executed in this position, you can comfortably be having 2 or 3 tick stop. It's the only market you're going to get away with such an efficient risk management protocol. So now notice they're hitting into the bid here, and there's some reloading going on. So you can be looking to take this to 13s, but now they're starting to reload. You want to see how the 5 years, can 5s take this out and tick down? If it does, so it ticks up. And notice the 5 years go first, and then the 10s go. So you want to see if you can get 13.5s again for this short position. And we'll fast forward this a little bit. There we go, taken, and now you want to see how they're behaving at 13.5s for you to clear 13s. Note 2,500 contracts at the moment. They've just taken out the price, and now they're hitting in to 13s. So this specific trade is the other side of the coin, okay? And it's all to do with the volume profile and essentially where stops are going to be. If you were to bring up a traditional chart, when you see the point of control and essentially a mini bell curve area, when you have price hitting below these, below the value area and point of control, when it's such a low volume traded place, the market should be hitting through it pretty well. And then there's not a time to be fading right now. For me personally, I would be waiting down till we get down to sort of higher volume traded area before considering any form of fades. But when the market is going through low volume areas, you can see it very clearly here on the 30 year as well. You should not really be fading this at all. You know, you want to be waiting for more confirmation or tons of absorption, as seen in the previous video, in order for this to be taking place. So this is a relatively shorter video regarding the price action that is seen for the step in the profile and pressure points. If you've got any questions or comments about what you're seeing, please feel free to comment below, and let me know what you think of this content for Treasuries, as I appreciate you either love Treasuries or you don't. So it'd be good to get everyone's feedback on what they're thinking of this type of content. And take your time with Treasuries, because you get so much longer to analyze the market, assess the order flow, and take your time. Okay, so I hope everyone has a great day, and I'll see you in the next video. Peace.